the 2022 recession, and what it means for you. I have all the details right here in the video, so let's get right into it. All right, the big R is upon us, recession. But what does this actually mean for you and the vast majority of Americans? Is it a good thing or is it a bad thing? Well, that's exactly what we're going to be talking about right here in this video. So let's get right into it. However, before we can get into those details, we quickly need to identify what is a recession in the first place. A recession is simply this: negative GDP growth for 2 consecutive quarters. That's it. Sounds pretty scary, right? No, no, it is not scary at all. Basically, all it is saying is that productivity and production right here in the United States is slowing for 2 quarters in a row. That is it. That is all the recession is. However, in this case, this recession that we're currently dealing with right here in 2022 is actually a manufactured recession, and it is a self-inflicted recession, which may not actually be the worst thing in the world. So I want to talk through all the details about that right here in the video and talk about how this may actually be a good thing rather than a bad thing for the vast majority of Americans. Now, don't get me wrong. There's a lot of headlines out there right now. There's a lot of talk that makes us feel like we need to all go into our bunkers and hide away for the next 6 months because it's a recession and it's going to be bad, right? Well, no, probably not. In fact, this may be a welcomed recession for the vast majority of Americans. We are not looking at the same type of recession that we were dealing with back in 2008, 2009, when realistically, that was a really bad one. That was very painful for a lot of people because the housing market collapsed onto itself. We're looking at a very different situation here. This recession is being caused by something completely different than the collapse of the real estate market. So let's get into it and talk about all the details behind this and why this recession may actually be a good thing and how it may be very welcomed by a lot of Americans. So I know, seems a little bit weird and a little bit contrary to what we're supposed to be thinking right now, but let's get into it and talk through this. And again, you can make your own decision on what I'm going to share with you here in this video. All right, so first off, the reason that I say that this is a self-inflicted recession, number one, the Federal Reserve is raising interest rates very aggressively right now, and they've already admitted that this is likely going to push us into a recession. At the same time, here's why this is self-inflicted. Between early 2020 and early 2021, the Federal Reserve printed $6 trillion from all the stimulus packages that were passed through over that roughly about a year to a year and a half time period. That's a lot of money. In fact, it's about 22% of the dollar supply that was in circulation is right now out there because of those stimulus packages. 22% of the money that's in circulation was printed basically in about a 15 or 16 month period of time. That's a lot of money to be printed in a very short amount of time. 22% of the dollars floating around. So what's happening as a result of that is it's way too much money chasing goods and services, which again is the definition of inflation. Too many dollars chasing the same amount of goods and services. Therefore, it's causing massive increases in price on literally everything. Doesn't matter if we're talking about food at the grocery store, gas at the gas pump, or we could be talking about anything. Houses, clothing, does not matter. Literally everything, because there's too many dollars in the system. So here's what they're doing. The Federal Reserve right now is raising interest rates, and they're also quantitative tightening. In other words, they're sucking money out of the system rather than pumping more money into the system, which was actually called quantitative easing. So when they're doing quantitative easing, that simply means they're printing billions of dollars and they're pushing it into the system, right? In other words, they're buying bonds. When they buy bonds, they basically trade cash, in other words, paper money, for essentially bonds, and then they hold the bonds, right? But again, this is a very complicated topic. We can get into that in further detail in a separate video. But basically all it comes down to is the Fed has actually switched from quantitative easing to quantitative tightening, where they are now taking money out of the system and raising interest rates. The whole idea behind this is to lower inflation. So when I said a couple minutes ago that this is probably going to be a welcomed recession and probably going to be a better thing versus a bad thing for the vast majority of Americans, here's why. The whole idea behind this recession and the whole idea behind what the Federal Reserve is doing right here, right now, is to lower the massive inflation that we're currently dealing with these numbers that we've been seeing recently are the highest inflationary numbers that we've seen since the early 80s. 1981 was the last time that we printed numbers with this high of inflation. Well, they're actually also anticipating that the real inflation right now is probably closer to 20%, but rather they're reporting, 8.5% or so percent right now. So again, what they're actually anticipating is the real inflation out there right now that we are all experiencing is closer to what the inflation was back in the 70s that we were all experiencing. If you were around in the 70s, which by the way, inflation was very high then, they're anticipating it's higher teens or even around 20% is what the real inflation rate is right here, right now. So that's why I said that this is a manufactured recession, because basically they need to do this. They need to collapse things. They need to bring things back into equilibrium and back into order in order to actually bring down this inflation. So as a result of that, they jack up interest rates and they take money out of the system because too much was printed over the last, couple years here from early 2020 to early 2021. During that time period, all that money being printed. So here's what this is going to do, recession. Now again, as we continue to experience negative GDP growth, again, basically slowing economy in the United States. It's kind of a good thing because here's why. Prices will come down on things. Now, again, I don't want to be here and saying, yes, I want to see the stock market crash. I'm not saying that at all. I'm very sensitive to the fact that people have retirement accounts, 401ks, IRAs, investments, things like this. I'm very sensitive to this, right? So I do completely understand. The stock market collapsing may not be a good thing, but we also have to understand too that yes, the stock market will come down, the real estate market will come down, the crypto market will continue to come down, all of these markets will continue to come down, as well as other prices out there as well on all the things that we're buying at the store, right? Clothing, food, all the stuff that we need, the essentials. Hopefully, those prices will also come down as a result of this. So, at the end of the day, if we didn't have a manufactured recession, if we were not going to be going into this period of time where economic contraction is going to be happening, we would continue to see inflation through the roof. We would continue to see supply chain issues. We would continue to see shortages of virtually everything on our store shelves because it would just continue on at the same trajectory that it was. That's why the Federal Reserve stepped in and said, we can't continue with this rate. In fact, they should have stepped in a long time ago, but I guess late is better than never, as the saying goes, right? So, as a result of this, when prices continue to come down on things more closer to equilibrium, this is the natural ebb and flow of any market. This is what happens out there. What happens is they print too much money, they overheat the economy, and then they need to pull the money out, and they need to raise interest rates and ultimately bring it back down. It's like a big mountain range, right? We go up the side of the mountain, we peak out, and then we go back down to the valley. It's the same thing with the economy, the natural ebb and flow. And the whole idea behind this is to keep the economy at equilibrium or thereabout. But the problem is they go too high and too fast, and they go too low and too deep, right? So as a result of that, as an effort to try to bring the market and to keep the economy at equilibrium, they overheat and then they underheat, right? So as a result of that, we see these massive booms and we see these epic crashes. And that's what we're currently experiencing right now. So at the end of the day, when it comes down to it, as we look at the current situation, we already know that the Federal Reserve is intentionally crashing things. It's not because they're evil people. It's not because they want to see people lose. It's because they need to do this in order to bring inflation down. This is what they perceive as the best way to bring inflation down. So the best way to do it would be to aggressively start sucking cash out of the system. It doesn't mean that they're taking money from us. It just simply means that there's too many dollars out there floating around. They need to lower the dollar supply because the more dollars that are out there, that just means that there's more dollars chasing the same amount of goods and services, which ultimately is the definition of inflation, right? Kind of makes sense? So when it comes down to it, as we look at this current recession unfolding in front of us, there's going to be some massive opportunities. If you're somebody who's interested in possibly investing in stocks, maybe real estate, if you're looking to buy a house to live in, if you're looking to get into the crypto market, anything like this, there's going to be much better opportunities. Right now, the markets are still kind of high relative to where they're likely going to be going. This recession is not over. This thing is actually probably just getting started. So it's probably going to be much more contracted than what we're currently seeing right now. But again, is it going to be such a bad thing? Probably not such a worst thing in the world. Now, I also want to throw this out there as well. Accompanying recessions, a lot of times also include massive job losses. Again, I'm not saying here that it's a good thing that people are going to lose their jobs, but it's something that we're already starting to see. Some companies are coming out right now, cutting hundreds or thousands of jobs. Again, I don't want to see anybody lose their job, but this is why they have unemployment benefits. And again, another thing too that we see during unemployment times like this, when we see spikes like this, is we see other pieces of the puzzle coming out, which are basically programs that get money into the pockets of the people, like stimulus checks. Yeah, exactly. I'm saying it. Here's what's happening. We've talked about this in previous videos, but a recession, in fact, if we look back at the 3 recessions that we went through last time, 2001, 2008, 2009, and 2020, the last 3 recessions have all provided stimulus checks and even boosts to unemployment benefits. So at the end of the day, another way that they can get cash into the pockets of the people during times like this to help everybody kind of get by with everything going on. But the whole idea behind the recession that we're currently in right here, right now, is to lower prices on everything and bring inflation back down to 2%. Yeah, seems kind of nuts, right? 2% is where they want to bring inflation down to. That might be a little bit of a struggle. I'm just going to say that much, because here's the thing. We're pushing 9% on inflation right now. And for them to bring it down 7 points is going to take a lot of effort. That's going to take a lot of work on the part of the Federal Reserve. But at the end of the day, never ever kind of go against what the Federal Reserve is doing, because ultimately they hold the power to do whatever they want with the markets, right? They can rip the markets higher and they can collapse the markets, basically whatever they want to do, right? So at the end of the day, when it comes down to it, this recession in 2022 is probably not going to be the worst thing in the world. Yes, we're going to see collapsing markets. Yes, we're going to see declines in asset prices on everything, stocks, crypto, real estate, virtually everything. But again, this may be presenting an amazing opportunity if you're somebody looking into getting into buying some stocks, if you're looking into buying some crypto, if you're looking to buy a house to live in or some investment properties. Again, you might want to wait on that one, because prices will be giving a much better opportunity to enter significantly lower than where we're currently sitting right here, right now. So at the end of the day, the big R word isn't exactly the worst thing in the world. It's not a bad thing. So you got to look at the big picture on this thing too. If you're looking at this thing from day to day, then yeah, it's probably not going to be a very pretty picture. But look at the long term. Look out 5 years, 3 years, 10 years, something like this, and look at the opportunity that this recession is going to provide to us. In fact, look at it this way. The last recession that we went through in, say, 2020, did that provide an amazing opportunity to maybe get into crypto, to maybe get into some stocks, to maybe pick up a house relatively cheap? Yeah, you better believe it did, right? What happened after we came out of that recession? The markets and everything ripped higher very fast and very aggressively, right? What about the recession back in 2008, 2009? Was that an opportunity to pick up some stocks, some crypto, maybe a house at a very, very low price, and all of a sudden ride that wave higher? Oh yeah, it presented an amazing opportunity, right? And again, it's the Great Reset. So rather than looking at this as a recession like, oh my, it's a recession, what do? I'm going to lose my mind. No, look at it as, wow, this is a great opportunity for the massive reset. We should be calling this the Great Reset rather than the Great Recession, right? We should be looking at this as a great opportunity to get things and to actually lower prices back down to reasonable levels rather than paying huge prices and inflated prices on everything, because that's the economy that we were in, right? So anyway, I hope this kind of gives a better glimpse into the 2022 recession, what we're currently dealing with right here, right now, and a little glimpse into the future. And one more thing I want to throw out there as well. How long will this thing last? It's anybody's guess. It's really anybody's guess. However, I can tell you this much. We will know when the recession will be over, because just watch the Federal Reserve. As soon as the Federal Reserve has over-crashed everything right now, and they've overdone it on things, and they reverse their policy, as in they start quantitative easing versus tightening, and they start lowering interest rates versus raising interest rates, it's game on. I'm just going to say that much, okay? It is game on. When you hear those words come out of the Fed, get ready, because it is game on. Things are going to reverse, and things are going to start ripping higher. So, just saying. Anyway, hope this one helps you out and gives you a better glimpse into the recession, or, as I said, the Great Reset. So, get ready, because things will get worse, but at the end of the day, they will get much, much better for the long term, if that makes sense, right? So, it's kind of something we have to go through. Nothing I can do about it, but this is something that's going on right now. So we can either be an opportunist and look at the opportunity in front of us, or we can go into our bunker and wait it out for 6 months or a year and eat all the canned food that we've been stocking up for the last year. And we can do anything that we choose. So I hope this one helps you out. Again, thanks so much for watching this. I really do appreciate it. Please subscribe down below if you haven't done so yet. Share the video with your friends, family, social media, and go back and check out some of the thousands of videos here on the channel. Enjoy your day, and I'll catch you again later in the